Good doctor, hello.
How are you?
How are you? Happy New Year.
Happy New Year.
Happy Western and Happy Lunar New Year in advance.
Yes.
So the Chinese seem to have everything under control, don't they?
I don't think so because, as you just heard, loan growth has been very strong in January. Last year, total loans increased by over $1 trillion US. That's obviously not sustainable in the long run. And it doesn't make sense for China to build more empty buildings and add to capacities in industries where you already have overcapacities. So my view is the economy for sure will slow down meaningfully this year. Will it crash? That is the big question.
Do you think it's going to crash? You think it's got the potential?
Well, it has the potential to crash because of the overcapacities that have developed. And as I just mentioned, when loan growth slows down, we don't know exactly how the economy will react to it. As you know, in America, the moment loan growth slowed down and the moment private credit turned negative, we had a big problem.
In China, though, they have many tools at their disposal. They've been through crashes before. It's not comfortable.
Sure. Look,
it's not comfortable.
I'm of the view, if you look at America, say in the 19th century, all the canals that were built, including the most profitable one, the Erie Canal, eventually went bankrupt. All the railroads, 95% of them in 1895 defaulted on their bonds and were insolvent. But at least they had the infrastructure, the canals and the rails, that then helped the country build industries. And in America, we have many financial crises and recessions in the 19th century and the country continued to grow. In fact, you even had a civil war and the country continued to grow. So in China, it doesn't really matter whether it's a bubble or whether the economy will crash or whether it's just a slowdown. In the long run, it should be okay.
What is the long run? That's sort of a moving.
Well, I mean, I think the next 30 years, both China, India, and emerging economies will do relatively well. Because although loan growth has been very strong in China last year and in the first months of this year, as we just heard, we're starting from a relatively low level of total credit as a percent of the economy. It's a different story in the UK and in the United States, where you're starting from a very high level of total credit as a percent of the economy.
What is the missing piece of the puzzle? What is the bullet in the chamber in China, which has not been fired yet? If there's one policy must do right here, right now, in your view, what is it?
Well, I think that the notion to increase wages is, of course, probably the right one, because it's nice to have railroads and all kinds of facilities, but people have to be able to afford them. So to increase wages is probably quite a good idea.
And you think that'll take care of this, all the yells?
Well, I don't think so, because we have excess capacities in the export industries. And so the higher wages may not help very much boost economic growth.
Right. You having fun, doctor?
With you always.
You ain't seen nothing yet. More than 1%. They were actually talking some weeks ago, doctor, about using the interest, using as their new benchmark, the interest on excess reserves that banks keep with the Fed. This sounds awfully academic to me. It's not really important, this kind of minutiae, or is it?
Well, I don't think it's very important. Other economists may have a different view. I think what is relevant is that the exit strategy, in my view, will be more money printing, in other words, more monetization. And whereas he may talk about increasing interest rates at some point, you could go, say, on interest rates to 10% or 20%, but if inflation is 20% and thereafter 30%, you still have highly negative real interest rates. In other words, interest rates, inflation adjusted, are negative. And I think this is what will happen in the United States for as far as the eye can see. As in the 70s, interest rates will stay below the cost of living increases.
Are we going to go back to a Jimmy Carter era type of stagflation environment?
Well, we are probably in this kind of environment already. I think the economy is not doing particularly well, as is evidenced by the large number of unemployed people. And also, if you look at freight traffic and so forth, I mean, real economic indicators, not the ones that are doctored by the US administration and manipulated, the real economic indicators don't suggest a very strong economy.
A while back, you and I were having a chat, and you said something which set off a lot of alarm bells. Remember what that was?
No, I don't remember. I talk so much.
You said the good old USA is going to be a default nation.
Yes, I think
It's going
that's
to
very
default.
clear to me. I mean, in the entire discussion about Greece, people talk just about will it be bailed out or not, and how will the bailout be? But actually, very few people ask, why is Greece in trouble? Greece is in trouble because it has too many debts. And the government has spent too much money, and the unions are very powerful. And in the United States, officially, debt to GDP is 379% at the present time. But you add the unfunded liabilities to it, then total credit as a percent of the economy is around 800%. And the government debt alone, with Fannie Mae, Freddie Mac, and the unfunded liabilities arising from Medicare, Medicaid, and Social Security are 600% of GDP. So at that level, you run into huge problems sooner or later, especially when interest rates will go up, because then the interest expense on the government debt will rise. And as you know, the fiscal deficits, in my opinion, will not drop below $1 trillion annually for the next 10 years.
So you don't buy the stuff that Obama was trying to sell to the nation, then 1 2/3 trillion, and then abatement, you know, and basically coming off the boil.
In my opinion, the deficits will go up and not down, because once you have large fiscal deficits, the moment you cut them down, you kind of have a contractionary impact on the economy. In other words, the impact on the economy is negative immediately. In the long run, what should happen is that the government size is reduced meaningfully, and that the salaries and wages of government employees are all cut in half, all of them.
That's not a bad idea, actually.
Yes, fire half the government, that would be the best idea, and then cut tax. Because the dynamic part of the economy that many people don't understand is not the government, it is the private sector. And the private sector has to be made competitive through low taxation and through competitive wages. But at the present time, the private sector is basically contracting and the government is expanding.
Aren't they addressing that, though, with a focus on small and medium-sized private enterprises?
It's a nonsense. The small and medium-sized enterprises, they're not going to hire as long as they don't know exactly how much tax they will pay, what the energy bill will be, and especially the health care expenditures that they don't know yet. So I think the small businessman, he's reducing the number of people he's hiring, not increasing.
Don't you get a sense that in America there's a certain prudence that's setting in? Instead of 100 million bonuses, Blankfein and Goldman only got pocket change, 9 million. Healthcare is on the back burner now. Well, they got their priorities right all of a sudden.
Well, the thing is this. Originally, Obama intervened very heavily in the economy. And in the Gallup polls, it is very clear that the Americans don't like a larger government involvement. And there are many statistics that show that actually government employees are paid much more than private sector employees. So there is a backlash against this intervention into the economy. So now it's backtracking and kind of trying to force the banks to reduce compensation and bonuses and restrict their activities. But that's also negative for the economy.
You know, Doctor, when the revelation broke that their deficit was blown out of the water, I mean, 3% is very, very, very tight, isn't it? I mean, it's quite restrictive. But it seems to me, just to put it in perspective, that the budget deficit as a percentage of GDP is nothing compared with a lot of OECD countries. Why are we even focusing on Greece to the extent we are?
Well, basically because it's the first case where the ECB or the Eurozone is likely to bail out the country. And how the process works is very important. In my view, as you know, since the beginning of the year, the dollar has been strong. In other words, it's more weakness in the euro vis-a-vis the US dollar. And what we will experience is really that when Greece is bailed out, basically it's a further indication that paper money loses its purchasing power because it's diluted through larger and larger bailouts and more deficits. So I think, I mean, I don't know what the solution is, but I wouldn't be very optimistic about the euro. Having said that, near term, the euro having become oversold, it declined now from 151 against the US dollar to 136 the other day. Now it can rebound to around 140, but I think more than that you shouldn't expect.
There's even, you know, Armageddon-like talk out there about de-Euroizing, you know, or basically dismantling the whole infrastructure. That was never in the text. That's not in the textbook, is it? I mean,
it would be unusual, but
the euro.
it is conceivable that it could happen because a country like Greece or Portugal may decide that the restrictions imposed by the ECB for the bailout on the governments and on the country are too harsh, and that they just leave the Eurozone. But actually, that would probably make the remaining countries in the Eurozone stronger and not weaker.
So you think this is a good thing? Do you think it's going to come out in the wash? I mean, what I hear from you is not positive.
I don't think it's a good thing, but I think it will be bailed out.
At what cost?
Well, at the cost that basically the strength of the euro is undermined, or the soundness of the euro as a currency is undermined. Because after Greece, there'll be others.
You know, for years, you and I have talked about the BRIC markets, right?
Yes.
But that was because of economic progress and potential. It was just the sheer numbers coming from low bases. That's what the BRICS are about. You know,
Yes.
Boiled down. PIGS is the new acronym.
Yes.
Here. Is that, it's a bit of a, you know, it's an unfortunate acronym in some ways, but is it deservedly so?
Well, but I think it's symptomatic. What you find in the world is an unusual situation. The international reserves, they've grown from $1 trillion in 1996 to at the present time over $8 trillion. Most of it are held by emerging economies like China, India, Russia, Brazil, and so forth and so on. And over 70% of international reserves are in Asia, including Japan. So what you have is basically in emerging economies a relatively low debt to GDP ratio. In most emerging economies, the mortgage market has hardly developed. People buy homes for cash. There's no mortgage market.
Right.
Whereas in the developed world, what we have is an over-leveraged consumer and governments that have liabilities that they can't meet in the long run. So something will break. And I think within the next 10 years, you'll see a lot of defaults. Now, before the US or the UK or the Eurozone defaults on its debt obligation, they'll print money. And then you get a lot of very high inflation rates.
Mark, have you been following that case at all there? It's almost like, you know, it's one of those things where you need something. Country A needs a lot of something, but they don't have it. They don't have this resource.
Yes, exactly. They don't have copper. They don't have iron ore.
No.
And so they are, of course, large customers.
No. Is there anything more to the story than that you know about that we don't know about here? It's kind of intriguing, isn't it? Like industrial espionage.
Well, I mean, there may be some, you know, where there is smoke, usually there's something to it. But I cannot really comment about it.
Okay. Let's talk, though, about what we're talking about, and that is stuff, real stuff.
Yes.
Piles of stuff. Australia is famous for piles of
Correct.
stuff. Where are we in the whole commodity run?
Okay, let me explain. The commodity markets were in a bear market 1980 to 2001. And then we had a huge rally in commodity prices until May 2006. And they moved sideways as measured by the CRB or the oil price. But when Mr. Bernanke slashed interest rates after September 2007, the CRB and oil prices went ballistic. As you know, the oil price before the rate cuts in September 2007 were $75. And then they went up to July 2008 to $147. And then everything collapsed. And the CRB dropped to 200. And the oil prices dropped to $32 at the end of December 2008. And since then, they went up to over $80 and are now around the $70 level. Now, what happened is when commodity prices started to go up in 2001, nobody believed that the move would be a permanent move, so there was no supply response. Towards 2006, when commodity prices had gone up substantially, there was some supply response. But then came the crisis in 2008, and the financing dried out. So then suddenly the supplies didn't increase because exploration stopped. And therefore, at the present time, in my view, we haven't had any real supply response yet. And it takes a long time to bring on new oil fields. And the marginal cost of producing oil today are over $70. And in the copper industry, it's similar. The cost of producing has gone up substantially. It takes at least 12 to 15 years to bring on stream a new copper mine.
So it's a supply issue or demand issue? It's a supply issue.
My view is near term, I wouldn't buy industrial commodities because, as I told you, I think the Chinese economy will decelerate very substantially in 2010 and could even crash. If the Chinese economy decelerates or crashes, what you have is, of course, a disastrous environment for industrial commodities. But other commodities, they haven't gone up yet, such as the grains. The grains in 2009 did not rally at all. And historically seen, they're very, very low. Now, it may take time until they start to go up substantially. But if you have time, the problem for individuals is that it's not so easy for them to implement. But you should be long wheat, corn, soybeans, or own a farm. That is, say, one way to participate in future food price increases.
Worst comes to worst, you can always eat your own stuff, right?
Yes, I mean, but I would also say today, the danger is that the next war is a dirty war. It's not fought by divisions of tanks facing each other, or through trench wars the way we had it in the First World War. The next war is a dirty war, cyber war. They'll switch off Bloomberg. You can't get your news on your TV monitor. That would be a disaster. Can you imagine? No more Bernie Low. Or you poison the water in Hong Kong, or you switch off the electricity, or you destroy the subway system, or something like this. When that happens, obviously you're better off in the countryside. So you should buy your villa in Thailand.
I will go back to my wife's ancestral village up in Dongguan. When is this war going to happen, and who's going to cause it?
I mean, I think it began already. We have cyber attacks essentially every day, where the hackers try to get into the State Department or Defense Department. If you can one day, let's say, hack into the defense system, you could essentially idle the aircraft carriers, or you could idle planes that can't take off anymore.
Have you been watching?
Happened already in Georgia.
Have you been watching too many movies?
Look, I tell you something. When I was young, we used to go skiing to Zermatt, and in the hotel there was always someone we perceived as loony because he was talking about voice recognition. We just couldn't imagine that you could have voice recognition where you talk and suddenly the text comes on the computer. And it happened. The many things that had happened, Jules Verne, his predictions about going to the moon and so forth, everybody thought he's a loony, and they all came about. And you better prepare yourself for emergencies in future. Because if people are prepared, they always worry about what Mr. Bernanke has to say. He's totally irrelevant. He's an irrelevant person in the context of history. Money will become worthless anyway. But the safety of your life, that is the relevant.
We're going to keep them. Okay, you ready for some input from our wonderful loyal viewers out there?
Yes, sure.
Okay, here we go. I'm going to start off with a contentious one here because I know you like a good fight, right, Doctor?
Yes.
All right. Paul writes from the Philippines. Okay, Paul, right on the system here. Doctor, you often compare the U.S. to Zimbabwe, but I agree with you in the long run. Paper currencies are nothing, but maybe beyond our lifetime. Your extremist view is no different from Robert Preckner, except on the opposite end. It's good for a soundbite, but it's not helpful to investors. You give a retort. Say something.
Well,
Keep watching.
basically, I think it's very helpful for investors to understand that if you print money, the asset class you don't want to own are government bonds and cash, because cash has a yield below the rate of inflation, below the cost of living increases. So as you know, since last March 2009, I've been essentially advocating people to get exposure to equities, because in an environment of inflation, you will do better in equities and in, say, hard assets such as gold, silver, platinum.
That's been terrible advice so far this year, though, hasn't it? I mean, January was just a horrible month
Well,
to be in that class.
if you read my newsletter, the Gloom, Boom, and Doom report, I've been advocating for the last few months that a correction is imminent and that the upside from here is very limited. But say if stocks declined another 10, 15%, I would think that it would represent a buying opportunity. Because let's say the S&P drops. We were at 1,150 on January 19th. Let's say we drop to 900. Do you think Mr. Bernanke will not implement more monetary easing and more quantitative easing and money printing? For sure, he will do that. And then stocks go up and the dollar will go down again. Now, in fact, I think the dollar looks quite vulnerable. It's just that the euro is not much better. It's not much better.
It's not that it's doing well. It's because somebody else is kind of crapping out right now.
So anyway, coming back to what is helpful for investors. For investors this year, the most important is not to lose any money. And we will have trading markets. There is a lot of volatility. The consensus is by and large that markets will close the year higher than they were on January 1st, 2010. I think they may very well close lower. But in between, you can have another rally up to, say, months of April, starting, say, in about 2 weeks' time.
You mentioned that equities in any kind of an inflation environment, even if it's lukewarm inflation, preferable to like precious metals. Half the questions are on gold here. Let me paraphrase a few here? Brooke writes in from Florida asking, if gold is really a saving grace of wealth preservation, why is it bouncing around down after hitting 1,200 per ounce? That's Brooke there. And then thank you to Kelly who wrote in. What if Greece defaults? What does that do to gold? And James and Subara also write in asking about gold. Presumably, they're very interested in maybe going in if this is a.
Well, I mean, the point is simply this. The Dow Jones today is at about the same level it was in the year 2000. 10 years later, you haven't made any money in stocks. The gold is up from $255 to, as was pointed out, went to over 1,200, and now we're slightly below 1,100. So we had a big move in gold, we had a big move in commodity prices, and some correction is happening at the present time, and I would not rule out that gold could go down to $950 or $1,000 before the next move comes. But I don't see a huge downside risk in gold unless the whole world collapses. But if the whole world collapses, you have more money printing, and if the whole world collapses, all the banks collapse. And then people will own gold because that's then the medium of exchange. So I don't see any scenario where gold would totally collapse.
Well, what about that horrible cyber war, World War III, that we were just talking about?
Yeah, I mean, look, if someone one day switches off the internet, you won't be able to get anything with a credit card. You won't work.
I can't spend.
No, you can't. You can spend if you have physical gold or cash banknote. That will still work. But that's why when I travel, I always have a lot of cash with me.
Yeah.
Because if one day you come across someone at an airline counter, they claims, oh, your credit card doesn't work,
All right.
at least with cash you can pay, and with gold you can pay.
We're going to. Do you like your humble abode to be magically clean, tidy, dusted, wiped down, mopped, fresh, crisp sheets every single day? If you do, save from having a live-in, then you might be in one of the many service apartments, and they're seeing more and more popularity. People just basically want a turnkey operation, no worries, no fuss, no stress. Elaine Young is the CEO and founder of Shama Service Apartments, a good friend of mine. I've known her for many years. She's been on this program ages ago when you were just starting out, and now you're not only a Hong Kong operation, Elaine, but you're in so many places. You're even in northern China, in Dalian, you're in Shanghai as well. You've been growing by leaps and bounds. There's no stopping you, girl, is there?
Thank you. Actually, 3 years ago, we had 233 apartments when I first came and saw you. Now we're about 2,000 apartments. So
whoa, that's a compounded annual growth rate of I don't know how many percent, but the numbers are very impressive. How are things going? I mean, are you, we hear about service departments, the way these main metropolises attract, top tier talent in and out. It's almost like a musical chairs, almost like a revolving door with the influx and outflow of people. It seems like, there's really unabated demand for the kind of business you're in. Is that true? Or is that
last year was tough. Occupancies came off about 20% for us, and rentals, this is across Hong Kong, and rentals fell about 20%, but certainly it's come back. Now occupancies are back in the 90-95% zone.
So it's very cyclical then, isn't it? I mean, when the bankers are going through a tough time, when financial businesses are having a tough time, you go through a tough time as well.
A little bit, but I'd say it's far less volatile than, say, a hotel operation, because we don't have the short stay volatility. We have long stay. Majority of our leases in Hong Kong about 6 months. Mm-hmm. So yes, it falls, but not as dramatically as hotels.
So it's more reliable cash flow. You're not a rent by the hour kind of outfit.
No, I like the occupancies of that.
You just like what?
Rent long term. By the hour would be better.
You prefer that?
Yeah. The occupancies are great. That's when you see the models of 120%.
Well, you get fresh sheets more often, I would presume. What do you think of it? What do you think of the business Elaine is in, Doctor?
Well, actually, I'm a shareholder of Ascot Residential, REIT.
Okay.
I suppose they are a competitor of yours.
They are.
But they are operating in different geographical areas.
Well, luckily for us, this is our home base, and Ascot haven't managed to get a foothold in Hong Kong. Mm-hmm. We would love to be in Singapore, but they're sort of that's their home base along with Fraser. But they're very good company.
Yeah.
So you think I should hold the shares?
I know what they're buying. I know the investors. They're doing well there. Yes.
Should I recommend the stock to Bernie? Do you think it would be a suitable long-term investment for him?
They're doing a lot in China, and China is very good for this market. That's where our focus has been for the last 3 years, and that really has seen so much growth, and the demand is just unbelievable.
Especially in a market like that, where especially people from Western markets aren't quite used to the purchase and sale process of a property.
It's difficult, and you don't know how long you're going to be in a market that in a city like China. Why do you need all the hassle and to furnish something in a very difficult, let's say, second-tier city?
I agree with you. I think the best in life is to have one house where you live, basically your home base, a farm, and then you stay in hotel suites or in serviced apartments. No worries, it's clean every day. Mm-hmm. You can call up someone to do all your work. Yep. And you don't have the headaches.
Exactly. Yes? One of our taglines was "No armor drama at Sharma."
Yeah, sure. I agree with you. I think it's a very good business model.
I hate it when the aircon's.
Can we buy your shares? Can we buy your shares?
Yeah, we just sold all our assets, so we're a little bit light to IPO, but certainly we'll manage one of your buildings.
I'm still talking to you as the CEO of a privately held enterprise. So, I mean, it's been a number of years, and you've certainly, your footprint is really big. You've got a big footprint out there. Why, you sold your properties because of the capital values of the community. If you want to capitalize on that, why don't you do an IPO? Then you can double, your business. We need invest.
Yeah, we looked at it, but in actual fact, our focus was very much the last couple of years China, and Morgan Stanley and Gore Capital are our shareholders. So, with the assets that they were buying and other funds, that was just a model that we took.
Yeah. Mark, do you want to hear about timing? I mean, talk about a sweet spot of timing. Elaine and I caught up in the mid-levels near where my apartment is. And for pennies on the dollar. This was right after SARS. She picked up, I think it was 41 floors.
48 apartments.
48 apartments, single block. They bought up the whole block, and they whipped it around, did a cookie cutter thing, got all the mod cons and everything like that, and they were renting for like 20s, 30 plus thousand Hong Kong dollars.
When we bought it, they were renting for 6.
And she, and she bought the whole apartment for, I believe it was $90 million?
72.
Yeah, it was just a drop in the bucket. The price of an old Peak Road, property. Talk about timing.
Lucky timing, that one.
And you sold that one.
Sold it. We sold it just end of December last year.
But not everybody can do that. 72 million is nothing, right? I mean, that's a paycheck for a Goldman banker in New York. But there's an emerging trend. What if I want to participate in this without necessarily buying a REIT or something like this? Is timeshare an opportunity? I think the lexicon's a bit different.
Yeah, in actual fact, in Hong Kong, we can't actually do, there's timeshare, there's fractional ownership. We can't really do that because a service apartment is generally, it falls under the hotel license when it's run out of a commercial property, and you can't strata a commercial property. You could theoretically take that, like you were just saying, the one that on Hospital Road, that's a residential building.
Right.
And if you wanted to do, say, fractional ownership, each apartment could be owned by a company, and then you could sell percentage shares in the company. Say everyone wanted a 3-month time period, you sell them 25% in that company.
Right.
But then you have to go through the Security and Futures Commission. So it's complicated in Hong Kong.
Yeah. Mark, you like what you're hearing here?
Yes, it's a very good business, but I wouldn't be or like to be in charge of a service department building. There's a lot of headache.
Well, that's what
a lot of people moving in and moving out, and the staff and this and that. I prefer to be a shareholder.
That's the upside of scale, the economies of scale, because yes, you can buy small buildings, you can do it yourself, but the real beauty is when you have a property of, say, 150 apartments, when you can employ a quality general manager.
The problems take care of themselves.
And then it becomes much easier.
Do you have anything in Chiang Mai, Thailand?
We don't. We're just about to open in Bangkok.
He lives in the middle of an open field, and
I could put something nice there.
Partition out his property.
I could put 20 stories up.
Units. I think you and Mark need to get on the shuttle.
I'll pass you my card.
Check out his property.
Yeah. We're opening Bangkok this summer, so I'll be visiting Thailand a lot.
Have a talk. I see Thai box signs in his eyes right now. So this is a conversation you should consider.
No, I don't want to do any business in Thailand. I'm happy to have a house there and I live there and so forth. I don't do business in Thailand.
Okay. Well, no.
I want to live
peacefully, without all the hassles of the mod cons. Thank you, Elaine.
Pleasure.
Thank you, good doctor.